So 100% bonus depreciation is coming back, and I've gotten a lot of questions on how exactly does 100% bonus depreciation work? What assets does it apply to? When is it smart to do it? What are some things to look out for? And so here are the things that I am telling my business owners and real estate investors about whenever it comes to 100% bonus depreciation. So for starters, bonus depreciation applies to any asset that has a depreciable life of 20 years or less. So some of your smaller 5 and 7 year property items are gonna be things like your computers, your furniture. If you have a piece of real estate, it can be the carpeting or even the granite countertops, maybe some lighting and the appliances. All of that is going to be your 5 and 7 year property. Now, some of the things that are 15-year property, if you're looking at a piece of real estate, is going to be things like your sidewalk, maybe you have a swimming pool or a driveway, even the landscaping and the fencing going around the outside of the property is all going to be considered 15-year property. Now, here's the thing, if you utilize something like bonus depreciation, you have to be very mindful of something called depreciation recapture. Essentially, whenever you go to sell an asset that you've already depreciated, you do have to recapture all that depreciation back as ordinary income. And the biggest thing I warn my business owners and real estate investors about is whenever you go and you depreciate an item and you're taking a deduction, you're going from a higher income down to a lower income, which means that if you go from one tax bracket down into a lower tax bracket, your deductions actually lose value over time. But with depreciation recapture, you could actually go from a lower tax bracket into a higher tax bracket. So it is very possible to pay more in tax on the depreciation recapture than what you had in initial tax savings.